Once again, ladies and gentlemen, boys and girls, and children of all ages, you're now tuned into the Investor Show as always. This is your gracious host coming all the way from the beautiful city and state of Denver, Colorado. Don't forget to hit that like, subscribe, comment, and share button. And as always, I don't have a lot of time, and I definitely know you guys and girls don't have a lot of time, so we're going to jump straight into it. On this episode, as you guys and girls can already see, we got a superstar guest today who's coming in right here in Denver. You know, she accolades all over the place, you know, from being the top 25 business women in Colorado, starting the new community transformation fund, raised $25 million so far, and looking to invest into BIAC, with this I think is Black Indigenous people of color,
Yes.
right? So starting out a fund like that, all these accolades that she has, some of you guys and girls probably already know her or seen her, but if you haven't done so already, let me go ahead and introduce you to her, to my guest today, Miss Danielle Shoots. How you doing today?
I'm doing great. I'm excited to be here.
Nice. Can you put the microphone a little bit closer
Yes,
to you?
yes,
There you
yes,
go.
yes.
Yeah, there we go. We want to make sure we got
Can
you
you
loud
hear
and clear. Yeah, there we go. So the thing is, for people who don't know who you are, you started the new Community Transformation Fund. Before that, you was at the Colorado Trust for a while.
Mm-hmm.
You was a CFO for a while.
Mm-hmm.
At a very young age, 26 years old, went through a lot of adversity too. But for people out there who don't know who you are, can you tell people who is Danielle Shoots?
Yeah, Danielle Shoots. I'm born and raised in Colorado. So I grew up in Colorado Springs. I went to CU Denver. So CU Denver grad up here. Chief Financial Officer by trade, as you stated. So I've been sort of all over the board industry-wise. I was a CFO at the State Health Department here in Colorado, then went on to the West Division of Comcast, where I was a construction CFO for the Colorado Trust, which is a large philanthropic organization here in Colorado. So managed a large endowment there and investments and a direct investment portfolio for work happening in Colorado, a lot of real estate work and small business work at that time. And then last year in 2022, launched the new Community Transformation Fund Denver, which is a venture capital fund for founders of color in Colorado.
Nice. Also, your fund started out, how much have you raised so far?
So we've got $25 million in approved capital on a $50 million raise.
On a $50 million raise. Nice. Okay. Well, looking at you doing that capital raise, to us, people of color, we look at that and we say, wow, $25 million, right? That's a lot of money, right? Which is a lot of money, right? But then again, you're looking at, when you get into the space, you'll realize 25 million is not a whole lot.
No.
Right? And only they're saying blacks only raise 1.4% of the raised of the trillions of dollars that's raised in venture capital. Why is it so hard? Why are blacks are not raising, at least 5% or 10% of the capital that's being raised?
Yeah, I think the inequities in the private equity space are apparent and really, really large gaps, right? Compared to other industries that have gotten a little bit better. But when it comes to the investment space and private equity, which venture is a sub-asset class of private equity, you see that most of the dollars are controlled by white men still, and most of the money raised is still raised in a significant majority by white men. So those entrepreneurs starting companies. And so this is a space that needs diversification in a major way. And it's sort of at the root of our economy. And so for me, I was thinking like, I got into this game. You wouldn't, like 2 years ago, you wouldn't have told me like, oh, you're going to start a venture fund. I'm like, no, I'm not. But when you really look around, I'm sort of an economist. My business partner calls me a careonomist at my core. And so like, what are we thinking about the U.S. economy and how it works and who's being left out and what are the long-term impacts of that? And for me, if we don't get capitalism working for everyone, then an overall wealth power in the world is not going to happen for us, right? So we're closing more businesses than we start in the United States of America right now. And a big reason is that people of color are starting more businesses, specifically women of color are starting more businesses than any other demographic, and they're completely undercapitalized. And so that gap isn't just about inequities. That gap is about an overall concern for me from an economics perspective in the U.S. that we have to get more of our people participating in the economy, banking relationships, investments, ownership, having equity in things. And if we don't, we're not able to continue to be the greatest wealth power. That's my prediction.
Okay. Well, this is one of the things I look at when I look at that gauntlet of, having that space of being in there with capital, raising capital, and going through that institutional capital, right?
Yeah.
I think a lot of it has to do, excuse me there, but a lot of it has to do with you have to compete. So when you walk in and you're saying, hey, I'm going to start a venture capital fund and I want to raise $50 million, right? And on the institutional side, when they're consulting this money and deciding where it goes, it's nothing against Danielle.
Mhm.
It's that, hey, I have Danielle. As soon as I get off the phone with Danielle, I have this person, this person, this person, and I have $10 million. I have to allocate it to one of these people. This is Danielle. She's new. She's just starting out.
Yep.
Versus I got someone else who's on capital raise number 10.
Yeah.
Right? Because they've been raising capital since the 90s or early 2000s. They're proven. They're successful. Why do I want to take the risk on this one? Who you're coming up, you don't really have your team all the way in place. You haven't really nailed down your mission. You're trying to get this together versus someone else is like, hey, I can just allocate, and a consultant is saying that they have to grade and pick and choose or whatever. I think that's, my opinion of why from my lens of being on both sides of like, maybe that's why you're seeing less and less.
It's really hard. I mean, to be a first-time fund manager is hard no matter what. We know first-time fund managers of color are managing a tiny, tiny percentage of total assets in the market. Right now, it's even smaller than what we raise as entrepreneurs. Because the way the system is designed, it's the experience game, right? And so I fundamentally believe people want to get this right. We want to diversify private equity. We want to diversify investment firms. We want to have more funds that are being invested by people of color into people of color. Like you hear that all across the United States. It's a huge push. But we have to look at the system and the way the system's designed. So to start a fund like mine, you're right. So I've never managed a fund before. So strike one, right? You're a new fund manager. I have a operations background. I know how to pull levers in a P&L. I know how to build companies. Oftentimes what we're looking for is, you just have investment experience and how well did you do on the last times that you invested in companies? Well, we didn't, because this is the first time that we're coming to the table with that. So that's strike number two. Trying to raise a $50 million fund as a first-time fund manager is very uncommon. But what they don't tell you is that if you're with a $10 million fund, you can't really afford to operate the fund. Yeah. And so I think for me, it was about being really creative. Number one, the social capital game is evident, right? This whole thing is like, who do you know? And who knows what about you? And who trusts you with their dollars? And that's the same for when I'm investing in a company, in a startup, right? It says a lot about how's the CEO, how's the team? And that's the same sort of due diligence I've gone through. So growing up here in Colorado and having built my career, I think really helped me. And starting the fund, and people knew that I know what I'm doing and building and growing and scaling companies. And so that helped a lot. But I think that, having money of your own is how you can start a fund like this. And so we know with the net worth and the systems that you can trace that data, that it's going to be really tough. So what I did was raise philanthropic capital to start my fund. So the Colorado Health Foundation, the Colorado Trust, when I left to start the fund, and Bank of America Foundation all gave grants so that I had operating capital to go raise money. And that's like the largest barrier to entry for folks trying to start a fund. If you can't pay yourself, if you can't build a team, and you don't have that initial operating capital, and you don't have a ton of money that you're sitting on when your own nest egg, it's a non-starter. And so I think there's so many ways where we're going to have to be creative and really look at the way systems are keeping people out of the investment game so that we can change it. Because I really do think people's hearts are in the right place, but you have to go after the system in that way.
Yeah, I agree with that. And I think that just natural business, once people get into a door, they like to create barriers of entry. It's just, that's part of their edge. And I sat down and got to know a lot of fund managers, and I purposely see fund managers do that. It's like, hey, well, I have access, right? What do you mean when you say you have access, right? How did you get that access? Was it via membership? Was it, whatever? And it's because of, a lot of people get relationships. They get access that other people don't have. And usually when you come in and you're coming from the bottom, you usually don't have that access. Yep. So I don't know why I'm, coughing here, excuse me. But I think that's one of the first things that I seen that I noticed was that like you said, relationships, access.
Yep.
If you didn't grow up in that environment, if you didn't work in that environment, how do you get access? Someone who's tuning in, watching this, or listening to this, and say, "Wow, I always wanted to start a venture capital firm," and you see why you don't see Black people do it.
Yeah.
Because naturally, you probably don't have the access to raise that type of capital, or even know how to get that type of capital.
That's right.
So my question is, when you see Black businesses struggle, why do you see Black and brown, indigenous people business struggle? Why is that?
Yeah, so, I think the number one thing that I think we all know and can easily point to is they're completely undercapitalized, right? So without investment capital, it is very hard to grow and scale a company. You're sort of on a hamster wheel because you need to invest money to grow a business. You need to hire employees, right? So we know that like 97% of Black businesses are solopreneurs. So one person. So there you go already, right? My ability to sort of go after revenue and grow my business is really low. But if I don't have the capital to hire a business, if people aren't taking those upfront bets, you really are just running
on fumes,
right? We all, we all been there. When I started the Boss Up, it was that we know that many of our founders of color are still working full time when they're trying to start their business in order to support growing the business and be able to support themselves and their families. We know that generational wealth gap is incredibly large. And so that plays a role in it. We know that home ownership gaps are incredibly large. All of this plays a role into why it is very, very difficult. I can't leverage my home if I don't own one to go ahead and use that capital to start a business, which is what many, many people do to start their small businesses. I can't get friends and family investors because I don't have friends and family that are sitting on an extra 50 grand for me, right? We know that that's sort of systemically accurate. It's not even just a law of averages. It's unfortunately, Black net worth is headed into a negative direction in the next few years, where we're like the average net worth for Black folks will be actually negative. And so if you look at the data and sort of, that's me, right? It's like, let's look at the data. Let's look at the economy. Let's look at the way systems have driven a gap that actually I think the whole United States has to recover from now. That's what it is. It's this access to capital. And it's like, we have to sort of kick the door down. It's not that we necessarily got invited into the room. And even with my background, and I've had billion-dollar P&Ls that I'm responsible for, it's still been just incredibly difficult because I'm a first-time fund manager.
Yeah, so that's true. That's I always tell entrepreneurs when they go out to start a business, first thing you need to do, get you a job. Right. I'm like, get you a job. Like, what do you mean? That's my whole point. I'm like, you need cash flow, right? Bill, you're going to need, your website is not going to be free. Even when I started my foundation, right? By me being in the military, I had cash flow to start the foundation. I had to hire a consultant to get all the paperwork. I needed a website. I needed an email. I needed a team. I needed photos. You know how that thing goes, right? So even when you're doing charity work, it costs to start. And even though everybody wants something for free, that money has to be generated from somewhere.
Right.
And it's the same thing with, you started, a registered investment advisor, which I started, right? I had to hire a consultant to help me get this and get that. And that whole gauntlet you got to go through. You got to have your tests, your licenses, and the licenses ain't even free. The school ain't free, right? So you do need that working capital to be able to do something like that. So now that we know what the issue is, new community transformation fund, how are you going to fix that problem?
Yeah. So when we decided to launch the venture fund, it for me is like, I knew we needed to do more than a check. And I'm fortunate that I've been sort of ingrained in the business community here for so long. I know our founders. I understood what our pipeline looked like here in Colorado. I knew where I'd be able to go get dollars as far as investments in the fund. But I feel like our founders helped me build this fund, right? What check size did they need? What stages are most of them in? And I actually think my competitive advantage is access to pipeline. So as a lot of venture funds are trying to diversify their portfolios and bring on founders of color and women into their portfolios, they've often said, I don't know how to find pipeline, right? And so I think pipeline is a bigger issue even than capital. I think
what is pipeline?
Yeah,
I know somebody's listening like, what do you mean pipeline?
It's like sort of a list of companies that might be great investments for a fund like mine, right? So a fund like mine at 50 million, we'll make investments in 25 to 30 companies and then save dollars to follow on as they continue to raise money. And so finding 30 companies that we think we can get great returns off of, that we can really see the growth potential and the scale. We're a high growth business, so a lot of tech businesses, tech enabled businesses, some health and wellness product stuff I believe we'll do, but these are businesses that we want them to turn into $100 million companies plus, right? And they may be at $1 million today. And so finding that pipeline, you'll often hear people say, oh, well, there's not pipeline. There's not a lot of businesses founded by people of color that are investable, which is, you hear that in corporate America, right? Where they're like, well, we're trying to diversify our C-suite, but we just can't find the talent. And people don't understand the way in which their own biases are getting in the way of finding talent and what they believe is talent and the questions they might ask somebody that looks different. And so, I have a lived experience. I'm a Black woman. I'm a mom. I had my son when I was 16. That's a very different lived experience. And when I sit across from a founder who starts a company that directly speaks to me, I think that the people who control the money don't understand how you can make money on some of these problems, right? Because it's not a part of, they don't see it as a problem because it hasn't been a problem in their lived experience. So I think we're missing like a huge chunk of the market, which I call the domestic emerging market, of folks who are emerging with ideas that the people who have control of the money don't even realize consumers will pay for. And we're seeing that shift. And so for me, I think my competitive advantage was definitely pipeline. Like I think people want to have investors that look like them. And there's not a ton of us in the US yet, not enough. And so that has allowed me to really have some amazing companies reach out, as well as we've been able to reach out to some amazing companies, even though we just launched last July.
Okay. Now, going into it, you're speaking about someone's listening to this. They're like, wow, I have an idea or a business. I'm here in Denver. I'll be perfect. I'm into tech, healthcare, whatever, right? And they say, hey, I want to get in. Danielle, me. How do they make that happen? How do they meet Danielle Shoots?
So there's two things. So we launched the fund, but we also launched an ecosystem around the fund because, venture is not the right capital for most, right? This is rocket fuel, I'll say. Like if you want to take your business from here to the moon, that's you want a venture investment, someone who's going to take a percentage of your business. So I give you $1 million check, you give me 10%, and we're off to the races. We're high touch venture, so we'll take board seats most of the time on the companies that we invest in. We have advisor language, meaning we could choose an advisor at any time if we think that you need somebody of our choosing to sort of step in there on your C-suite team or just in an advisory role, strategic CFO, for instance. Like we might say, hey, that's a gap, right? We're not strong in the financial forecasting space. We're going to assign somebody to work with you. And so we really want to be in partnership with the companies that we invest in. But we also built an ecosystem because there's a lot of people in Denver and Colorado doing really, really great work for small businesses of color. So that will launch at the end of January, what we call the Collective for the Advancement of BIPOC Plus Businesses, CAB for short. And that has a ton of groups in it that have accelerator programs or full year-long programs to grow and scale your business. Back office supports like bookkeeping and HR that we know folks need, even if venture is not the right investment tool for you. How do you get ready to go get a small business loan? And how do we support that from an overall ecosystem? We have some amazing partners
I like that.
in the ecosystem because we want to grow and scale companies. And you can't do that just with a check. That's not how the game is played, even though that's how people tell you, right? Like, oh, it was just this brilliant founder who started Facebook and he got $1 million check. And then here we are now, it's a bajillion-dollar company. That's not how it works. Like your VC's there, they cut checks. They put people on the board. They're in your finances. They're there for subsequent rounds as you're raising money. When something goes wrong, they write another check in order to get their investment back. Like we need to teach the code and how the game actually works. And that's what we want to do. We want to be as transparent as possible. So right now, if you go to my website, you can fill out a survey that lets you know whether venture is really a good idea for you. And if not, you can get a list of all of our other partners. And then soon that partnership will be up.
I like that when you just said about having the ecosystem, because not everybody needs venture to go in and say, man, I got a pretty good idea. And I try to tell people, like, you need to pay for marketing because you could do some great things, but if people don't know about it, you have to have, marketing. Marketing is going to cost. You need, the common things of to build a team
Mm-hmm.
because there's tons of things you can get, but not everything is going to work for you. So that was a good thing too, to kind of see that, I didn't see that with the whole ecosystem, but you hit on something earlier. You talked about being a team mom,
Yeah.
and you talked about becoming the CFO. What was the state? Was it state healthcare?
Yeah, the state health department here.
State health department, and how it didn't go that well.
No, it did not. Yeah, I was 26.
See, the thing about it, everybody loves to say, I always tell people, this is America. Nobody has the perfect story.
Mm-hmm.
So I tell people, hey, humble yourself, because not everybody has the perfect story, and that's not really the American way.
Right.
You look at some of the top, right? Like look at Elon Musk. If you're Elon Musk Jr., nobody wants to hear your story. Mm-hmm. Everybody wants to hear that started from the bottom. Everybody want to hear that rags to riches. How did you get there? But the thing about it, you was a teen mom, went off to, had your son at 16, then become a CFO, where you're like, hey, I'm 26 years old. I'm a young CFO, but it didn't go well for you.
Yeah,
right?
It was really hard.
That adversity, right?
Yeah.
At what point when you was a CFO and things was going left? And I saw what you were saying, that when you have a team of 30 people and you're working long hours, you're not doing something right.
Right. Yeah. I was working like 15 hours a week. I didn't even have a career long enough to know like how to emulate being a great leader. Right. Because I'd had one boss prior to this, and now I was, in charge of a lot of folks, and it was overnight, and we don't really train people well in leadership and how to run things. And that, really at that point, when you're that high up, your job is leadership. Your job is your team. And so it was really hard for me. I didn't delegate. I didn't really know how. I sort of kept everything to myself. You go from being an expert at something to like having to get work done through other people. And so that first like 6 months of that role was really hard. And I was like almost convinced that I was gonna get fired. So I just like sort of went in and finally was honest and vulnerable with my team just about my fears and that I just didn't know what I was doing. And I think that changed it for me, right? Like the way a team rallied around me in that moment.
So, I want to, so let me guess, you called a meeting and you said, hey guys, listen.
Yeah.
What did you say?
I remember like writing in my journal the night before, like, if you're going to go down being yourself. And what that meant for me was that like my son was 10 at the time, in 5th grade, because he skipped to 4th grade. So he'll be 21 this year. Mm-hmm. And I hadn't told anybody. Like after I graduated college, I didn't really talk about being a mom. I had my daughter by this time too, and I'd been married for years. And so like a very different life. And I really didn't talk about it because it was like a shame. I didn't want people to do the math. I didn't want people to use it against me. And so I just wasn't like sharing such a huge part of my life. Like, it's not that I was ashamed of my kid, but people always like, oh, leave your personal life at home. And that record, that horrible tape that we give so many people, especially women, was playing in my head. And so I didn't talk about what I was going through at home. I didn't talk about being a mom. And so I was like, well, like, just tell the truth. And, for me to be called inexperienced was really hard because I was always the youngest. I was the youngest mom in the room, the way people stared at me. And so it was such an insecurity. And I carried that into my leadership. And leadership is hard on your best day, but to do it inauthentically is just nearly impossible. And I remember just going in and saying like, here's what I'm sensitive about. This is why I'm so sensitive. I'm the youngest CFO.
You told the whole team this?
The whole team, of mostly women, because it's the state health department, and most of them had worked there longer than I'd been alive. Like folks stay in government for a really long time. And they rallied around me in that moment, right? Because then they connected on this level of mom, or in many ways.
The mother goose.
Yeah, like, exactly. Right.
Bring in the little hand. Come on, we're going to do this together.
Exactly.
Okay.
And they did. And we did it together. And they taught me so much. And I was able to sort of release control of a lot of things in a lot of ways and bring them in as teammates versus, thinking I had to sit somewhere on top of some hierarchy, right? It was collaborative.
And know all.
Right. Yeah. Never. I was never going to learn what some of them knew in their pinky finger, right? They've been doing this for so long. And so it was really about learning to build teams, and that like my job was to motivate and cheerlead and be a visionary and really drive towards vision and innovation. And once I settled into that as a leader, instead of all these other preconceived notions, then I sort of found my stride.
Okay. So now that person who's sitting out here, you talk about your career from being that team mom, going to Colorado University, right?
Yeah.
Then working your way up into corporate America, becoming a CFO at 26, and then you went up to the Colorado Trust, right?
Well, first Comcast. So I was at
Oh,
Comcast for
Comcast,
5 years. Yep.
went to a VP, became a VP at
Yep.
Comcast.
Yep. And then
Okay,
the trust. I was the chief financial officer for the trust for a few years before I started the fund.
got it.
Yep.
So watching how you did that from the first time having the CFO, then you kind of went down, at Comcast, and then you went from accountant to director to something like VP, right?
Yeah. Yeah. I was a CFO at the state, and then I went to Comcast, and I realized like, it's interesting. This is an important part of the story, which was like, everyone's like, what? You're going to take a backward step in your title to go, over to Comcast. I was the manager of financial planning and analysis, was my first job at Comcast.
Mm-hmm.
And I was like, yeah, I mean, like I'm 28
Yeah,
or whatever, 29. It's like I have my whole career ahead of me and I wanted to go into corporate America.
Mm-hmm.
I knew the CFO of the West Division at the time. I had sat on a board with a friend of his. And so I wanted to learn it. I hadn't, the government doesn't have P&Ls. There's no profit or loss, right? It's taxpayer money. And so there was a new part of finance I really wanted to learn. And I loved it. Like I love forecasting. I love the market. I learned like really my stride. It's an incredibly disciplined company, but I was willing to take the title change because I felt like I had my whole career ahead of me. And I got promoted quickly to director of FP&A and then vice president. So I got promoted within 2.5 years and then was a vice president for another 2.5 years.
Okay. So watching this, and did you always knew you wanted your own business?
No.
So how'd you get up to the Daily Boss Up?
Yeah, I
and
never.
Tell us about the Daily Boss Up, because you went from, the Colorado, you went from college into the State Department, into Comcast, into the Colorado Trust. Mm-hmm. How much were you managing or overseeing at the Colorado Trust?
$600 million. And then my P&L when I left Comcast was over $1 billion. Over
$1 billion. Mm-hmm. So now you get there. How did you end up in the Daily Boss Up? Becoming a blogger out of all things.
Yeah. So I I did a lot of speaking, and like leadership became my thing. Like I really love leadership. Mm-hmm. I love the study of leadership. And so I would do speaking engagements, and I did a TED talk in 2017. Mm-hmm. Millennials were born to lead. And after I did that, I was just getting so many emails, like so many questions. And it just resonated, I think, with a lot of young professionals around leadership and who we are sort of authentically as a generation. And what does that mean for how we show up in the workplace? And rather than try to like do one email at a time, I was like, I'll write blogs, because there was always themes like, what do you do with confidence, and how do you have influence even though you don't have people reporting to you on an org chart, and just really common themes that I was able to start sort of blogging about. And then a friend of mine was like, you can monetize this. And so we started the Daily Boss Up in early 2018. So before I even left Comcast. And so we sent sort of leadership coaching tips and tricks and blogs and podcasts that we listen to or love out via text message. So we were trying to meet people in their phones.
And you didn't have the investor show on there. What's up with that? You did not have
exactly. What was I
thinking?
thinking?
What was she thinking? Didn't even have an investor show on there. Goodness.
Yeah.
So getting into this, because I always tell people 7 steps. I always tell people 7 steps to life and business. I always say, hey, in the beginning, I said, we all are working to become a philanthropist.
Yeah.
Right. I said, at the end of the day, that's what we're all working for. I said, first, you just want to have a job. Then once you get a job, then you want to get a good job. Then once you get the good job, you want to move up in that good job. Then once you get that good job, then you want a business. Mm-hmm. Then you get that business, you want the business to become successful. Once that business becomes successful, you become a philanthropist. Mm-hmm. So like at the end of the day, you're just working to become a philanthropist. That's always my thing, right? So when you look at this, someone who's listening to this, right, who may be in a corporate position, who's like, man, I want my own business. I want to have my own business, but should I go to corporate America route to learn my own business? How would you balance that?
Yeah, I think the journey is different for everyone. I do think that we are underestimating the power of having worked in other businesses, especially corporate America, if you want to start your own business. So a lot of folks are coming out of school, wanting to go into startup. And I think that there's something really powerful about having worked for other people, both in who you'll be as a CEO, who you'll be as a leader, how you fall down and get back up, and having to, work with other people. And, I think fundamentally our fund will be successful because we all know how to grow and scale businesses. My investment team does, right? Like I can look at a company and say, oh, I can see the 4 levers we can pull to, to grow revenue. I can see the expenses that we can cut and still run it. I can see how we can make this more efficient. And I think that that is just sort of underestimated in the investment space over the last 10 years. Where it's a lot more about, how big is the idea, and less about the fundamentals of business. Yeah. And I think the fundamentals of business are incredibly important to a solid market and to keep a market solid. We just saw a huge downturn in private equity in the last 6 months, which didn't surprise me even a little bit, based on sort of an asset-based market where valuations are, really high and money's flowing and it's easy to get it. And it's like, well, are we actually growing businesses between rounds, or are we actually just growing the size of check that people are getting? So, I encourage people, like, don't get discouraged, and like be really unapologetic about your goals, but give yourself a lot of grace on the journey. Like I could have never guessed what my path here would have been, or my path to starting a business. I didn't even think I wanted to do that. My brother's been an entrepreneur his whole life since he got out of college. And my whole family works in his companies other than me all of this time. And I was like, I'm not the entrepreneur. Like, I loved corporate America. I learned so much there that I just encourage people, like, collect tools, right? Like, you would collect tools before you go on a 10-mile long hike. Well, starting a business is like a 200-mile long hike. And so what tools are you collecting other than passion and a great idea to go do that, and sort of map out the plan in that way, and recognize that the universe is pretty interesting in the way that it'll give you what you need if you're open to it.
Okay. Now, like you were, stating about starting your own businesses, and, because so many people, I think that at the heart of everybody, it's a little entrepreneurship thought, and maybe in the heart, maybe in their mind, someone like, well, I want to go get a business. And and listening to your story and watching you and stuff like that, I think one of the biggest things you benefited from was probably your network.
Absolutely.
But by moving up, you move up to executive position, you get to go to so many meetings and meet so many people get to meet with you, because I always tell people it's never about who you know. It's always about who knows you. And, people, right. Oh, I know this. I know. I'm like, no, it's about who knows you. And I think by being in let's say, if you started with a small company, your network is limited. Versus, let's say if you start a small restaurant or whatever, right? Your access and what could be limited. You're going to have to learn it or whatever. But let's say if you went to a McDonald's and worked in the corporate side and built yourself up, and now you get to know how the supply chain works and who are the players in the industry and whatever. Then you went off and started your own thing. You can call those same people and say, hey, I needed some forks, spoons, and knives and whatever to help me do this or whatever. So that's one thing I always try to tell people too, is like, hey, get you a job for cash flow. But if you can get into those positions, because that's happened to me by interning at different companies. People are like, Prince, why would you intern there? Well, like, hey, you know how many people I met and how my network grows just from sitting at this desk or being affiliated and associated with certain people. You get to grow vastly, right? Yeah,
wealth moves around on paper. Like, my network is my net worth. And the other suggestion, I've been on nonprofit boards since I was 19. And every job promotion, when I went from the state to Comcast, when I went from Comcast to the trust, it was all about my nonprofit volunteer work and who I met along the way. Even the chair of my investment committee and my business partner in the fund, I met him by being on a board with him. He's a former head strategist for McDonald's. So, like, can you imagine how connected that he's been in this other thing that I never thought he would come on board with me for? So, who do you know? Who knows you and who knows what about you? That's really important. So it's not even just that they know you.
Break that back down. What do you mean? What do they know about you? What do you mean by that?
Like, have they seen you in action? Could they describe like what you're great at? Right. I think that's what's important. And I read that in a book one time. It's not who you know. It's not what you know. It's who knows what about you. Yeah. And so what would they say, about Prince or Dee? Like, I know what people would say about me over my 15-year career, and like how they would describe the way I work and what my flaws are and what my strengths are and what I have to work on and what people know me. They get to see me in action, and it's made me really busy, but it's also built a network that is just worth its weight in gold.
Now, this is one of my thought processes when I've been working on, right? I never understood this in America. It's just that once you get to, you went to college and, You know, when you turn 18 years old, everybody opens up the gauntlet for scholarships.
Yeah.
Scholarships, grants, so many ways to help educate you to get you ready for the next phase of life, right? My thing is, why, you can get loans, all that type of stuff. My thing is like, why wait until I'm 18? Why not start off when I'm a kindergartner, right? When I'm a kindergartner, why not give me an investment account and give me financial literacy and let it compound for the next decade plus.
Grow itself.
Let it grow itself, because when you go out and you teach financial literacy sometimes, and let's say if you go to a low income area, they have their own problems already, right? They're not thinking about investing.
Yeah.
Hey, I'm trying to figure out, am I going to be living here today? Am I going to be living here tomorrow? Things like that. So what do you think about that? Reallocating resources from scholarships to investment accounts for kids.
Right.
For kindergartners.
Yeah, I mean, we need a whole nother show if you want to talk to me about my views, like sort of on philanthropy, having coming out of the philanthropic sector. Now I believe in philanthropists as people. Like I believe that's me. Wherever I go, I'm going to take a spirit of philanthropy with me. The philanthropic system, though, I think is, ineffective in a lot of ways. And I think that what you're talking about is the reason, right? So scholarships and grants that aren't sustainable, don't grow, don't compound. When we're a capitalist society, we know how to grow money. And we're just not doing it. When we talk about Black and brown folks, we're not doing it. When we talk about education, and you're exactly right. Like I'm an economist because my 5th grade teacher turned my classroom into an economy, and I fell in love with it. And I knew, like,
shout
that's the way. Yeah, exactly. She was a Black woman, so and that doesn't hurt, right? To be like, oh, and not only was it an economy, and I got to learn about it, and it just matched the way my brain operates anyway, and it felt so much like home for me, and I'll never forget it. I just took it with me forever. But it was also learning it from somebody who looked like me was like incredible. Now I look back on it, I'm sure she was an economist, but that teaching was what she could do, right, at the time.
Okay. Now, so since you said that, got something for you. So going around, you see so many people talk about money and kids or whatever. But about 7 years ago, came up with this idea. And here's your hardcover copy, right? This was the first book. This was Wesley Learns to Invest.
I love this.
Right? That's back in 2015. One of the first ones that ever came out teaching kids about investing back in 2015. Right? And then in 2019, I had to do it again. Wesley Learns about credit, right? You're a Broncos fan?
I am.
So I know you know who Terrell Davis is,
I
right?
do.
So we collaborated on the third book, Wesley Learns about Insurance, starring NFL Hall of Famer Terrell Davis.
Oh my God.
So, and that came out in 2019. The first one came out in 2015. So yeah. So that's the first one, 2015, 2017, 2019. There you go, right there. The first children's book on investing, insurance, so that's what we want to do.
Huge.
Oh yeah. So you didn't even know about it. You were sleeping on it.
No.
See?
This is amazing. I was like, I need to buy this for all my nephews.
So, yeah, those are yours. So, but my thought, that's always been one of my goals and mission, was like, hey, why wait till you turn 18 and everybody wants to go in? It's like, you're in Cuba and you don't know about tobacco.
Yeah.
Right? It's like, how do you grow up in Cuba? That's everybody knows you for, and you never heard of a Cuban cigar or tobacco. People look at you crazy. In America, we're known for capitalism. Right. And you can go get an MBA and be clueless about capitalism. And you got to ask yourself, why is that? And my answer to that is kids. So people are like, why you always target kids? Because they have the biggest machine of getting the compound interest. Yeah. And the other thing that I noticed too was why I wanted to target schools, because, with my foundation, we had sponsors come in and buy stocks for kids, right? In order for me to award kids stocks, their parents had to open a custodian account for me to transfer the stocks to them. Yeah. Some parents were illegal. Yeah. Some kids were in foster care. Yeah. Some kids were, parents had all type of crazy stuff going on. Parents wasn't really involved in their lives. Right. And it was sad because they went through everything to do this, but I couldn't even award anything to them because of their situation. And it goes back to the same thing. You're kind of contributing to the wealth gap because you have a certain amount of people. I couldn't control who my parents were and where they worked at or whatever, but now I don't get the Coca-Cola stocks that was being given out 10, 15, 20, 30 years ago, right? So my thing was that every kid goes to kindergarten. Everybody goes to kindergarten. And how in the world have we not figured out or can't figure out a way to say, hey, you know what? You hit on this earlier. Scholarships go broke over time because they're giving out money every year. If they don't go broke, they lose effectiveness.
Right.
Giving somebody $3,000 back in the 70s was cool.
Yeah. Yeah.
And 2023.
Buys books.
Yeah. I got one book. You know, thank you.
My son's a junior in college. I understand.
See? So when you see that, you can see how you can lose because of inflation. You know, you're looking at inflation, you know, you understand all that stuff. So I look at it and say, well, why not use this whole economic machine to benefit you? To say, hey,
exactly right.
Now you walk in, I can tell a kid, hey, you have a $50,000 account. If you successfully graduate high school, you know, put some ramifications on it, some requirements. Why aren't we doing this? So I started my own initiative of, you know, I wrote their own books and, you know, I award kids stocks and books.
I love it.
So,
it's incredibly important. It's all we really need to do. So, you know, there's a piece of me that's so discontent that we're not doing that, right? We're not setting up trusts. We're not setting up endowments for nonprofits. And so therefore we're sort of just pushing money in a cycle that's not actually moving the needle. We haven't moved the needle on poverty in 70 years. So what are we doing, right? Like if we're the most philanthropic country in the world, but we're not moving the needle on poverty and we're constantly fighting about taxes. Like to me, those are distractions to the fact that we actually do know how to build wealth better than any other country in the world. We're just not using it for everything and everyone. And we need to start. And I have a ton of hope because mathematically speaking, you can't have 65% of your population that's not building wealth and grow your wealth as a country. And so we have to get people involved. So beyond whether people want to and beyond racism or systemic inequities, beyond all of that, even beyond hearts and minds, the math is not mathing. And so we, by the year 2045, really have to figure something out with how we're going to, you know, really get people through. And I, you know, if there's a legacy I want to leave, it's that I built wealth in my community, and that, to your point, starts with education. It's, you know, the only nonprofit boards I'll sit on now are related to education and getting people educated, because that's where it starts. We hand the code of capitalism down when we hand the money down. So if you don't have the money to hand down, you also don't have the code. So we have generation after generation that doesn't understand how any of it works, and it's become the enemy, versus our lack of participation in it is the enemy. That's the problem that needs to get solved in my mind.
Now, I got to ask you this question. We got to go to something a little bit more lighthearted before we get out of here.
Yeah.
You're from Colorado, right? Colorado State University, the Buffalo, which is about, 30 minutes north of us from here, you know? And just got some big news going on, you know? I mean, people used to ask me, hey, Prince, you want to go to the Buffalo game? I'm like, nah, I'm good. Nah, for what? No, I'm not going to Buffalo game. Now you're looking at now, Deion Sanders is in the city.
Yeah.
You know, Russell Wilson came, Ciara came. I know Terrell Davis moved back. Now you got Deion Sanders. I don't know. Denver's warming up, right?
Yeah.
What do you think about Deion Sanders leaving Jackson State, coming up here to your alumni?
Yeah. So University of Colorado will correct Prince for those out there.
I said
because Colorado State University and CU are mortal enemies. So
my bad. My bad.
CU
okay.
in Boulder. I graduated from CU Denver, but I've been a CU fan my whole life. So I grew up watching the Buffs with my dad. Like back in the day, they were really, really good, and Nebraska was their sort of rival. And so we'd watch all those games together. And so I'm a CU alum. I'm a CU fan. I'm a Colorado girl. And I'm a Deion fan. So like he's one of my favorite people on the planet. I think he's the funniest, most intelligent person on the planet Earth. And so like I'm obviously really excited. I think it's good for the game. I think it's good for the different sectors of the game. And I actually think it's good for HBCUs. And I know that that's been kind of a hard discussion, but the more that our talent is not concentrated in one place, but that can be seen by all, and that we start to recruit and diversify teams all over the country, he's going to be a recruiting magnet, right? And so he's worth every penny, and getting people into CU and diversify that college. And we got to diversify colleges as much as we need to double down on making sure that we're funding HBCUs the way we need to, because we don't. I'm excited. I'm obviously excited for, personally. And also I just think, overall, I think it's the right thing to do. It has to start happening. We need some more Black coaches that, are that talented, that are getting put in places that will diversify the teams and the schools and bring people to the school. And I know he will do that. And so I'm excited for CU in that way too. I think it was an incredibly strategic move in both ways.
Now, what do people say? Hey, he left Jackson State. He left for HBCU,
Yeah.
and he was generating so much capital. He was building that new community you was talking about.
Yeah.
He was transforming the HBCU, and he cut ties and went. What do you got to say to that?
Yeah, I mean, money compounds. So if he made, $500,000 at Jackson State and dedicated that back to Jackson State, but then also if he makes $5 million here and puts that money back into HBCUs, that's a beautiful thing too, right? Mm-hmm. So it's all about like what we do with the wealth as we build it, and I want us to be everywhere. And I think that we have to bring our talent and place our talent in places that will draw more talent that looks like us. And I think that is what we're doing with him and his ability to sort of grow and scale a club. And some of us are builders. And I think that's what he is, right? Mm-hmm. And once the wheel is built, you don't want to turn it anymore. And I don't know the man, but, so these are all my assumptions.
Oh, yeah. Exactly.
But he seems like a builder to me. Like he likes to build things. And then when it's built, it's time to build the next thing. And I doubt it has much to do with money at all for him, and more about his legacy and the impact that he can have on the game and on college and on going to school. And
okay. So I didn't speak on the other side. If someone wanted to invest into the new community, what's the minimum investment?
So how
does that work?
Our minimum investment is $250,000, and you have to be an accredited investor, which depending on if you're an individual. So we have some high net worth individuals that are invested in the fund, and then institutions. There's limits for that that you can look up really quickly and decide if you're an accredited investor. I've been really creative and I understand philanthropy. So I actually have a philanthropic partner that is an investor in the fund, that if you wanted to set up a donor advised fund and invest in NCTF Denver that way, that's an option for us too. So please reach out if you're interested in investing. We'll be raising through October.
Okay. Yeah, I forgot to put that part in there. I was so concerned on you making investments. I'm like, what about somebody making an investment into you?
Yeah.
So is there anything you want to bring up here that we haven't talked about?
No, this is great.
Oh yeah, definitely. Thank you for stopping by our office today. Would you be back?
I'm back anytime. Yeah.
Okay, definitely got her back. I got her on camera, y'all. See, she said it, so she can't back out of it. Yeah. So definitely great to have you on. Definitely going to be following you and watching you. If there's anything I could do to help or assist, anything like that, definitely let me know. Definitely willing to help out with that. And definitely glad to have you on.
Thanks for having me. This is incredibly important, and I'm glad this information's getting out and keep doing it, because this is like probably the biggest hurdle. So we just got to keep talking about it and
keep talking about it. You got to think about it. This is year number 9 for me.
Oh my God.
Yeah, I started this back in 2013 in Hawaii. No, I was in Florida at that time. Then I got transferred to Hawaii. Then I started doing then I left Hawaii. So I do a show out in Hawaii. Then I came out here to Denver. So just been my thing that I like and love to do, that I've just been doing for years and years and years. And it just kind of, back then it wasn't YouTube and podcasting it just kind of morphed. Yeah. You can even put videos on LinkedIn and Facebook back then.
Right.
But this will be streamed when it comes out. It'll be streamed on all our social platforms, LinkedIn, all that good stuff too.
You were ahead of your time.
Ahead of the time. I know, right? So definitely. Thank you for coming on to the show. And as always, guys and girls, my name is Prince Dykes. This is the Investor Show. And to the next video podcast, cartoon, book, or whatever else crazy you see me do around the globe, my name is Prince Dykes. Peace, be safe. I'm out, and thank you.